Hello and good day, everyone. We are so excited to have Joel Landon with us today. And I have a really nice quote. Take a moment to daydream. This is out of our Choose Happy book. And it's the grand essentials of happiness are something to do, something to love, and something to hope for. And that's by Alan Chalmers. And if you don't know what we do, we, the Nest Egg Builders, empower people to build their wealth consistently by passively investing in commercial real estate. And today we're so excited to have Joel Landon with us from EQRP. What we love about Joel, besides him having the great company he has, he works with you on your 401k to help you and show you how to avoid taxes for your business. So you could take, of course, working with your accountant, you could take your money, look at your money, and talk to your accountant about how much you could put into your 401k with Joel. And Joel will tell you if you could put in more or less, and some of the ways to use it, and some of the ways to avoid taxes for a period of time. I wish forever, but it's not going to work that way. So Joel, tell us more about how you started this company and what the benefits are to our people and whatever else you'd like to tell us about the company, which we're just so excited about. And some of our listeners are your clients.
That's right. And Peggy, I love the introduction. Unfortunately, I didn't start this business. I wish I did because it's just such a wonderful company. And I had the joy of working for EQRP. Damien Lupo is actually the founder of our company. And I know you know Damien and others know Damien. But like I said, I'm fortunate to actually be a part of this mission. And I do see some of our members here today, and it's exciting to see that they're also a part of your community. And thank you so much for having me on the show. I've been with EQRP now for about 3 years. I've been in this industry for about 6. It's been a lot of fun watching this industry develop. I've been to several events. I've interacted with many clients. I've been on, several shows like this where I've been able to communicate this message and at the same time learn more and more about how our service and our product can help you guys, the investors. I'm sure a lot of you are small business owners. This plan is not just designed for people to take advantage of investment opportunities, but it's also designed to support the small business owner or the self-employed individual. I know some of you probably are W-2 employees. Maybe you even have some self-employed active income that you generate on the side. We'll talk a little bit about how you can use what we provide to make your lives a little bit easier. So Peggy, whenever you like, I'll go ahead and kick it off with a little presentation here. It sounds like we're going to have a Q&A towards the end. Is that right?
Yeah, we like you to do like a 20-minute presentation and then go to Q&A. And then I told you what I wanted to bring up for
Yep.
you, for
Cool.
you to support people. Yeah.
Let
So
me
yeah,
go.
share the screen.
I'm on it. You got it. Let's see here.
Oh,
Sure.
and I was going to comment. I think most of the people here are full-time entrepreneurs and might have a side gig of a W-2.
Cool. Awesome. That's great to hear. I thought what I would do is kick it off with this little message. This is actually our mission. We interact with a lot of people who are families. They have their family, whether that's kids, parents, friends they call families. We empower families to build their retirement. And we do that by offering them a really unique plan that they can then invest in unique asset classes. And of course, Peggy does just a phenomenal job exposing her community to commercial real estate opportunities. So we'll talk a little bit about that today, and we'll kind of bridge the two together so that you can see how this is applicable in your lives. And I'll probably take about 10 to 15 minutes to go through some of this, maybe a little bit longer. And then, like Peggy mentioned at the end, I love questions. I love opening it up to a little bit of a Q&A. So any questions that you might have, we can save them towards the end. And please write them down so that we can dig into it. But Some of this information might be new to you. Some of it might be something you've heard about before, and this is just going to be a great chance for us to dig deeper into this topic. So with that said, let's kind of get right into it here. Let me just move forward here. Okay. So a lot of people, when they first hear about the name of our company, they're like, what the heck is that? Like, never heard of EQRP. Some people try and sound it out. Hey, is this ECURP? And we understand that this is like a really unique or unusual name for a company, but it does have actually a meaning. So when you hear the word EQRP, it actually stands for Enhanced Qualified Retirement Plan. And that's really synonymous with the 401k and IRA industry. But what we've decided to do is we've decided to design a system that we call the EQRP system. And it's a system that you control. It gives the person who is either a current or existing participant in a retirement plan, it gives them the control to make the decisions that they want to ultimately grow their retirement funds, grow their retirement journey, and have the lifestyle that they want to live. And the majority of our EQRP members do this passively. This plan, this system is designed to help the investor or the participant of this plan to invest passively, which is synonymous with what you guys do at the Nest Egg Builder. So these are our 4 pillars. When you think about that control, it always starts with support. Getting into something like this, you need a team, obviously, that is designed to provide the support you need to be a successful self-directed investor. You can ask any of our existing EQRP members that this is something we really put a lot of emphasis on. Whether you're brand new with an EQRP plan or you've been with us for several years, you'll notice that we're really in the weeds with our members because it can be challenging to jump into this space, to get an EQRP plan or a self-directed plan, and to do it all on your own. We don't want you to do that on your own because you're either going to miss out on advantages or features or benefits, or worse, you might make a mistake. And believe me, we've seen that before, and they could be very expensive. Another one of our pillars is the learn pillar. We love to educate our members. In fact, we just had Peggy on our show not too long ago. We just recorded that, and she did a phenomenal job covering commercial real estate. And we're about to air that on our community portal here in a couple of weeks. So we love giving information that's relevant to the passive investor. And we do that through our channels. We do that through we call it the Badger Tribe community. And it's essentially a virtual community where our members go to get access to a lot of resources that I'll talk about. But learning is a big piece. And we want you to be a successful self-directed investor. So we have individual account managers I'll talk about here in just a second that help you with that. Networking, that's our 3rd pillar. We know that it's hard to be a successful investor, specifically passive investor, if you don't have the right community or the right people around you. And lastly, we do provide an opportunity for you to either invest with us or with our members. We have a really big member base. We have about 2,300 members. And a lot of them are fund managers, syndicator, sponsors, and we allow them to showcase their opportunities to our members so that they can have access to opportunities. Okay, so let's dig in a little bit more into, exactly what is an EQRP plan. I talked about EQRP itself. We offer the plan as a part of the membership when you join EQRP system. So the plan is a self-directed retirement plan. A lot of y'all have probably heard of a solo 401k, self-directed IRA. That's essentially what this is. This is a retirement plan that is designed where you have complete control. You are the decision maker. You're the trustee of the plan. So not only are you participating as a beneficiary of retirement funds when you go to retire, but you're also the decision maker. And it's totally legal. It's not a loophole. It's something that's actually defined in the IRS code. And it was designed, specifically our plan, for the small business individual. But we found a way to present this to everyone. We offer this plan to our members who are self-employed individuals because they qualify. They generate active self-employed income. We also have a lot of W-2 individuals that may not have self-employed income. They may not be moonlighting or participating in some type of a self-employed activity, but they say, Joel, we want this. I have all of these retirement funds that I want to move into a self-directed plan that you offer, but I've got a 9-to-5 W-2 job. I don't generate any active income. What can we do? So what we actually do is we set them up as an EQRP affiliate, and it's that easy. It's at that point that we pay our affiliates for their involvement, and now they're generating active self-employed income. They take that active self-employed income, and if they want, they can contribute that to the plan because it's qualified, or they take that income and they go spend it on their own personal needs or save it. So either way, we've designed a process to allow each one of our clients, whether you're self-employed or not, to be a qualified self-directed 401k administrator. The beauty of this plan is the fact that you get to choose the asset class. That's what our members want. They want to break away from the traditional way of investing in a retirement plan. They're sick and tired of the one asset class that they are kind of pushed up against, which is, what you'd find in Wall Street, what you would find in the capital markets, a mutual fund that's been developed and designed for your company. They're sick of that. They are watching their friends invest passively in real estate, commercial real estate, Bitcoin, land, whatever alternative asset class. They're watching others do that and earn a great living or earn, enough money for a proper retirement. People want to be a part of that. So this type of plan gives you that access. Last but not least, you're reaping all of the benefits. So of course, we are a for-profit business. There's going to be an upfront expense. There's going to be an annual expense that's only, reasonable for us to provide this level of service. But it's nothing like you're experiencing right now by leaving your funds, your retirement funds, in a qualified plan managed by a company that, quite frankly, probably doesn't even know who you are, that isn't offering you the level of returns that you should be expecting. So let's talk a little bit about EQRP plan support. Again, we don't want to give you the plan and say, bon voyage, good luck, I'll see you later. We want to dig into the weeds with you. So you're actually given an account manager that is trained, knowledgeable, educated, experienced. They know how to walk you through the process so that you can become a successful self-directed investor. We do provide the coaching. So if you want to make contributions, if you want to make distributions, we show you how to do it. We don't necessarily coach you on why you should do it or how much you should contribute or how much you should distribute. We aren't tax advisors. We don't know exactly how to do that for you. We don't know what would make sense for you because we're not in that space. We'll leave that to the professionals who are in that industry who can give you that guidance and direction, but we will make you aware of the option. And sometimes people don't take advantage of eligible contributions, conversions, because they just don't know. They haven't been told, they don't understand the why, or quite frankly, even how to do it. But we'll give them the exposure so then they can at least know that it's an option. And then they can move on from there and do more due diligence and determine if, yes, this is something they want to do. So if they decide, yes, Joel, I'm ready to make a contribution, $20,000, talk to my CPA, or I've done my own due diligence and I know this is what I want to do. Great, let's go ahead and help you record that. Let's make sure that it's documented properly and that the funds are in the right place. Same could be said for a distribution. Joel, I've determined I have a need. I'm going to pay whatever tax burden there's going to be. I've already figured that out. Great, let's go ahead and make sure that your distribution is done the right way and that the right tax forms are filled out. We'll do that for you. So Lastly, when it comes to support, we have our virtual community. It's a place that some of you, are probably already familiar with, where you can go and interact and socialize and learn from others. And that's what I want to touch on, is the learning from others. So when I talk about plan support, our members learn a lot from one another. And it's because they've had interactions with us, or they've done their own due diligence, their own research. And so what they can do is they can go to that virtual community and they can interact with the people there and learn from them directly. So we notice that a lot when we go into moderate. We have members exchanging ideas all the time with each other. We had one member talking about how they can do a conversion with a specific asset that was undervalued. And there's a process that you can go by that will help you convert that asset at a lower value than if you try to convert the cash directly. So some really unique ideas that are tossed around in our community platform that you can learn from. All right. So at this point, a lot of folks might be asking, okay, where do I even begin? I'm kind of capturing this, or some of you who have been exposed to what it means to self-direct your retirement, you're probably thinking, cool, I get this. What's next? It starts with a session over Zoom, just like this, where we interact with you. We show you some different slides we distill it down a lot more, and we show you a lot more details, and we make it applicable to your situation. But you ultimately have that session, and we look at and evaluate what are you sitting on right now? What is your current Wall Street 401k or IRA? Where is it at? Then we initiate the rollover, and that right there, that's some heavy lifting. Unfortunately, we take that on. Once the rollover is complete, it's sitting in an account as cash in your retirement plan, ready to deploy. And so it's at that point, you're either already aware of what you want to invest in, and it's a matter of, okay, let's hit the button and move it. Great, we'll help you with that. Or maybe you want to explore the unique asset classes that are available to you. So we start exposing you to those asset classes, whether that's us saying, hey, go get in touch with Peggy Beauregard. I know she's got some great opportunities. Or let's have you get in touch with Chris or Amy. They've got, something in some unique spaces there that you might be interested in. We love doing that. We love making connections for you with our people. So this is a really basic overview of what does it look like next. As we kind of round out some of the details here, I just want to touch on some of the EQRP value. And Peggy brought up some really important ones. That middle section there, tax advantage gains, we're going to talk about that in just a second, but I just want to highlight at the top there, diversify your investments. So, it's important to have the right investments or the right assets in your plan or in your portfolio. And in this space, you can explore a lot of that diversity. And sometimes you just need to know the right people. And again, I'm just going to go back to the fact that we have that community of like-minded investors who are exposed to those diverse investments that are unique, and they're designed to hedge against inflation or to hedge against market cycles. And so when there's the variety, when you have that variety and that diversification in front of you, it does help you make the absolute best decision for your investment portfolio. Let's talk a little bit about the tax advantaged gains. So, I mentioned that this is an ideal plan for a small business owner. One thing that's often misunderstood or really not even, it's not, people aren't familiar with it, is that you can make contributions to this plan as a self-employed individual. And the limits, they've been creeping up year over year. But for this year, an individual has a substantial opportunity to make contributions as both the self-employed employee, for lack of better terms, as well as the self-employed owner or employer. And so for 2024, if there was enough net income, the limits are $69,000 for somebody who's under 50. That's significant. That's so much more. I like to say that's almost 10 times more than what you can contribute one IRA per year. Now, don't get me wrong. A lot of folks are probably not self-employed. I get that. They're making contributions to their W-2 job as a employee participant. Limits are lower, but maybe they're receiving some matching. And yes, you should take advantage of those opportunities. But this is a great way for you to move existing qualified funds either in an IRA or a company sponsored plan and then invest that way. If you're that small business individual, this is a great way for you to either defer taxes, making pre-tax contributions because you don't want to pay that tax burden now and you want to invest and grow that money and you'd like to live in a lower tax bracket. Great. This is a phenomenal plan designed to help you accomplish that. Or if you're the small business owner that is in a situation where they can actually make contributions after tax, all the better. You're now using a tax advantage plan to go invest in an asset and your gains are now tax-free. So there's benefits to both sides, whether you're making pre-tax contributions or after-tax contributions. There's a ton of benefits either way. Now, while we're talking about tax advantage gains or tax advantages, it's always a great idea to bring up that anytime you use retirement funds in a tax-exempt entity like these plans that we create, like the self-directed IRAs that others create, there is the potential for additional tax on your gains. Now, let me go ahead and talk about that tax. It's known as unrelated business income tax, and that's really specific to some tax-exempt organizations. An IRA is a perfect example of a tax-exempt entity or organization that is subject to unrelated business income tax. Now, an EQRP plan can be subject to unrelated business income tax. However, the EQRP plan is not subject to that tax when the money is invested in debt-financed real estate. A lot of us invest in debt-financed real estate. It's probably the most common asset class that people are investing in. So when you go to a syndicator and you say, hey, I want to invest with my IRA money, I want to invest in your commercial real estate opportunity, and I know it's debt financed. I know that a portion of this investment is going to be debt financed. And I also know that that's going to generate unrelated debt financed income. So with that being said, my gains are now subject to a tax. That's with an IRA investing in debt financed real estate. Now with our plan, because it follows a different tax code, if I did the same thing, if I went to a syndicator or a sponsor and I say, hey, I have a 401k, I have an EQRP plan, and I want to invest in this commercial real estate, and I know it's debt financed, I can rest assured that my gains will not be taxed. That UBIT tax, and that UBIT tax it's expensive. It's the corporate rate. So we always like to highlight some of the tax advantages, and I covered self-employed contributions and how you can defer taxes, or you can, reap the joy of tax-free gains with after-tax contributions. I talked a little bit about the UBIT tax. That's a big deal. A lot of people have called us and they've said, hey, I've been investing now for the last 2 years in a real estate venture. I invested $200,000 and we're about to sell. And I just found out about this unrelated business income tax. I found out because somebody else was talking about it as a limited partner. What can I do? We can easily roll over that asset in kind. We've done that many times. We've done that so that the limited partner doesn't have that tax burden when the real estate deal sells. So it's been a lifesaver for a lot of people, and that's why we do like to highlight that. Last but not least, the white glove service. We're very hands-on. Some people, they may not realize that that's actually advantageous in this industry. They may think that that's not necessary. But what we've seen is we've seen that our members who are absolutely satisfied because of the white glove service. We're very detail oriented. We understand exactly what it is that our members want to invest in, what they need, the support they need. We understand how to answer their questions. We understand how to get answers to their questions if we don't have it right away. So we're very involved, and we want everybody to know that, because coming into this industry can be daunting. It can be uncertain, and we want to help you, walk away with clarity. So hopefully that gives everybody a little bit of an idea of what we do. Again, I know some of you were probably already aware of this industry, maybe even a little aware of EQRP and what we do. But I'd love to open it up for any questions that you guys might have.
Thank you, Joel, very, very much.
Oh, of course.
This is great. I have a bunch of questions. But does anybody else have some questions before I go? You know how I can bogart the whole thing. So, yeah, you brought up some really interesting points. So, one of the questions you talked about was you could be self-employed and you could be an owner. And then you said 69,000. Are those two do those have to be two separate accounts, or can that be one account? Or so
Great
can you
question.
explain a little bit about that?
Yeah, that is actually a really great question. So it's one plan. It's one plan that you are a participant of. So you're making your contributions to that plan as the employee. But then those additional contributions that come via the employer are the employer profit sharing contributions.
Mm.
It goes into the one plan that you are a participant of. But the separation is, one is coming from your elective deferral or your own income as the employee, whereas the other is coming from the profit sharing of the net income of the business.
Thank you.
Hmm.
That's great to know. And then you said earlier and then later, if somebody already has a self-directed IRA and has assets in it, not cash, can they roll those assets?
We do that. Yeah, we do that quite a bit, Peggy. So as you can imagine, a lot of our members are actually, they come to us and they've already been investing passively. And it isn't until they figure out one of a couple of things. First, they might figure out, okay, I just got my IRA statement for the year and I'm paying this much for what they're doing for me. And maybe it's, taking care of that immediate need that they have of holding the assets in a retirement plan. But when they start to recognize the additional value that we offer, that they're hearing about from their friends, they're making a comparison. They're comparing the cost that they're paying each year for their plan with another firm versus what they would pay us and what we would offer them in return. So we get a lot of people that have those existing assets. They don't want to do anything other than move them and re-register them in the name of a new plan. We do all of that work for them. And believe me, we've re-registered a myriad of assets, for one client at a time. And the other reason we get a lot of clients is they first hear about the opportunity in a podcast, they read a book, they hear about it from a friend or from one of our affiliates, and they had no idea that it was an option. They never knew that an old company sponsored plan could be rolled over into a plan like this. They thought maybe it had to move into an IRA at Wells Fargo or Chase Bank. But then they find out through our information, oh my gosh, this is an opportunity for me to move my cash, or I should say liquidate my shares in whatever mutual fund it's sitting in, and then move it into a new plan and then invest from there.
Thank you very much. Which brings up another thought, and that was, you said, I am the trustee of the plan. So as the trustee, I decide I want to invest in a certain commercial property. Do I have a checkbook? Do I have to fill out a form? Is there?
Really great question. So, yes to all of that. You are the trustee, and essentially that means you have the power of the pen. You are the signer on your bank account. So you have that option to wire funds when you want to
Hmm.
specific offering. You don't need to notify anybody. You don't need to notify me. You don't need to notify your account manager. If
Oh,
you know you need to invest and you don't want to miss out on an opportunity, great. Go send that wire transfer off. Let's make sure it's recorded. So follow up with us. Let's make sure it's on your ledger. Let's make sure your subscription agreement or your contract is filled out appropriately. So you could either do it all on your own without any permission. You've already given yourself permission, or you can enlist our support. We see a lot of brand new members get involved or get us involved in their first few transactions. And we actually like it that way. We want to make sure that it's done right. But believe me, we have a lot of members who've been doing this for years. We don't even know what they're doing. You know, we have our follow-up conversations with them throughout the year, but we don't really know what they're invested in because they're just doing it on their own. And so many people love doing that on their own.
sure. Well, it makes sense. Well, some of us know how to make decisions on our own, and then they have this process of paperwork you have to go through, and they're like, "Oh, you're using an old form. Really, what's different about it? Oh, the year on the bottom isn't 2023, it's 2024. So you have to fill out a whole new form."
Well said.
I mean, and it takes a week or more, depending on whether somebody's got time to look at it. So it can
Great.
be very frustrating when even though you've already made your decision, you can't get them to understand what it is you're investing in, which is just real estate. Anyway, so thank you. That's like huge. To me, that's huge.
Yeah, it really is. I can't tell you how many conversations we've had with members who are leaving a custodian. I used to work for a trust company, so I'm really not dogging on them or giving them a bad rap, but they have policies and procedures that they have to go through. And if you're in a queue, that could be challenging. So you're up against a queue of other people that are trying to move money and trying to engage in a transaction. And it's not always the case, but it can slow down a transaction. And we don't want that. Our members don't want that. They want to be able to just come and go and do it the right way.
Yes, and then they have what you just said, policies has nothing to do with the law. It's their company policy. I'm like, is there a law that says I can't use the same document or whatever? Me, that just sets me off. It just drives me crazy. Like, I just want my money invested. I've got the work done. Let's move forward. Oh
And
no, you got to redo everything.
yeah,
So that so there's that frustration. Go ahead, Joel.
you said while we're on this vein, I can't emphasize enough the form filing process that we do for our members. So we're in the middle right now of a lot of form filing. So each year, a qualified plan, whether it's an IRA or a 401k, needs to state the value of the plan in a unique IRS form, and that has to be sent to the IRS. A lot of companies that offer 401k plans like ours will give the client a 401k plan, but they won't support them with the form filing. We do. We try to make that as seamless as possible, even though we're gathering a lot of data for that. And we make sure it's done in a timely fashion. We'll help you file an extension if we need to. But we do that to take that burden off of your shoulder so that you can get back to your W-2 or get back to your small business. Again, the idea is to do as much of this as possible passively. If you have a taxable event, we do the same thing. I can't tell you how many CPAs thoroughly enjoy that their clients do business with us. We'll set up conference calls or Zoom calls all the time with CPAs just to show them like, yep, we went ahead and we did the 1099-R for your client. Here it is. And they're thanking us. They're saying, thank you. Like, you just saved us time. We didn't have to try and hunt for this. And so we have great relationships with CPAs. We make the form filing process very streamlined and simple for the client.
Thank you very much. That's great. And who do you file that form with?
So are you referencing the IRS forms?
The IRS. Oh, yes, that was the subject I wanted to bring up.
Yeah, for sure.
So I just read this article, and Joel and I talked about it and John a little earlier today, that so I'm reading this article. I get a little magazine called The Bottom Line, and it's 3 different cases of the IRS court, U.S. tax court, wins and losses. Well, the wins are the IRS and the losses are the people. And 2 of these 3 cases are from IRA accounts, that people took money out of their IRA account. So I just wanted to bring this to your attention, because when you're working with an IRA account, it is a little different. There are rules and regulations that go with it. Joel will tell you all of these things, or whoever you're working with. So one of the people had a IRA, his 401k, and he lost his job. He was a W-2. He lost his job, but he had diabetes. So he didn't have money. So he took money out of his IRA to cover his diabetes prescriptions. But he thought he didn't have to pay any taxes on the money he took out. Well, guess what? He didn't have to pay the 10% penalty, because Congress has said if you have an illness, you can take a certain amount of money out and you don't have to pay the 10% penalty, but you still have to pay the taxes on the amount you take out. Well, he thought it was all free, so he never claimed that at all. And of course, he got caught at it, because the IRA company, they file against you. If you took money out, they let everybody tattletales on everybody. That's what the 1099 and the W-2 is, for me to tattletale on you if I paid you money. I wouldn't normally do it, but IRS or Congress requires that I tattletale on you. So that was one of them. And then the other was a husband and wife who basically gave their company to their daughter, and their daughter started making things look like the sellers, the father, not her father, stepfather, was fraudulent, and that she was trying to get everything straightened out, and she needed money by going to an attorney to get it all straightened out. So they took over $1 million out of their IRA account. They paid the taxes on it. When they finally ended up in court, they actually found out it was more of a scam. She was scamming them, but they lost all that money, right? So they filed to get their money back that they had to pay to the IRA, to the IRS. The IRS said, hey, you signed that you were taking the money out, so whatever you do with the money, that's up to you. You still owe the taxes. So before you pull money out of your IRA, talk to somebody in the company, or to somebody that understands, your CPA, your tax advisor, your financial advisor, before you take money out. Have a conversation whether this is a taxable event or not, or a penalty. So please.
You know, Peggy, I'm so glad that you brought some of those case studies up, because so many of our members have borrowed from their retirement funds through their EQRP plan, which is a self-directed 401k. You can't do that with an IRA. You can't borrow from it. And I understand not everybody needs that feature, but it isn't until you have a life-changing event and you need quick access to $50,000 of your own money, you can do that with an EQRP plan.
Okay.
We can show you how to do that fast. We can help you with a promissory note that we have for our clients. And you can set the terms, you can set the rate. We walk you through all of that per the IRS rules, but not a lot of people know about that. They don't.
I didn't know. That's the first I heard.
Yep, you can borrow from your EQRP plan. So big differentiator between an IRA and what we have to offer, and it saves a lot of people's skin. And you know, there's some other unique options. You know, you could convert in plan with our EQRP plan from pre-tax to Roth. And it immediately, because it's an in-plan conversion, it converts those funds into Roth basis, and you don't have to follow the 5-year rule like you would with an IRA. You can withdraw that Roth basis without the penalty. So some very, very unique features that an EQRP plan can offer that an IRA cannot. Not even your company sponsored 401k plan can offer that Roth basis withdrawal option.
That's great to know. That's really great to know. So you said I could borrow against my IRA.
For your EQRP 401k.
Yeah.
You can't borrow against IRA.
The company,
Say again?
can the company borrow? They're the companies who put the money in. Can the company borrow also? Sometimes companies get a little cash flow poor and they need some money.
Great question. So I'll give you a scenario.
Okay.
Because these are self-employed individuals making self-employed contributions. If you as an individual, it's the participant or the individual that can take the loan, great, take the loan. If you need to use those funds for your small business, you can do that.
So it's not the business that's going to borrow, it's the individual that's going to borrow. The trustee can borrow.
That's exactly right. In theory, the trustee can borrow.
That's great. Well, I kind of ran out of questions. Does anybody else have questions? I think I know a lot about IRAs and how they work. And then there's, like, you've just brought up a whole bunch of different things that I have thought about, but I just thought, oh, well, those are the rules of IRA. You're stuck with it. But this is great, Joel. Fantastic. You've given things that nobody else gives. Fantastic.
I'm telling you, just connect with us. You can go to eqrp.com if you like. I'm going to give Peggy a link that she can distribute to you, and it'll allow you to get connected with me if you like to just have a conversation. I mean, we're totally willing to have a conversation just to answer questions or strategize.
When will I get that link?
Can I send that to you tomorrow, Peggy? Is that okay?
Tomorrow? Yeah, I was going to put it on the when we send out the recording the same day, but maybe we'll hold that off till tomorrow.
Okay.
That's fine.
I might be able to just get one generated before in the next 30 minutes.
Oh, okay. Whatever you choose. Thank you very much. John, I have a question.
Yeah.
Thank you. I'm with Peggy. I learned a couple new things today, and I've heard a couple of these presentations. I think you're right. I think you were one of the first speakers I saw in the Nest Egg Builder. Related to your conversation you just had, if you borrow, are they just the collateral for the loan, or are you selling the assets and using
Great
the
question.
fund? What are, when you say you can borrow the funds or borrow against the funds, can you clarify?
Yes, really good question. I had someone ask this earlier today. You have to have the cash. The liquidity has to be in the account. And I understand that not everybody is just going to be sitting on cash in their EQRP plan. The idea is to invest it. But if the opportunity is there, then yes, if the cash is liquid and you can pull that, you can borrow up to the maximum, even if, keep in mind, it's a percentage. You can borrow a percentage of your overall plan value. The portion of that value is in gold or real estate, or some kind of private equity fund. As long as you have the cash to pull and it's 50% or less than the EQRP or the plan value, then that is eligible, that is qualified.
But not against, because when you're in life insurance type policy, infinity banking, you're borrowing against, and then that's still earning, but it's a totally different.
It is. Great questions. Yeah, because that does clarify something that comes up quite often.
I bet it does. In other words, they want you to have the money so they can borrow from you and keep their money in their account. Yep. That doesn't
So
happen.
is the advantage that the loan is a non-tax transaction?
That's exactly right. A few more advantages, right? Like, it can be challenging to borrow $50,000 from the bank. There's a lot of underwriting. There's a lot of criteria. You don't have to go through that. So when people are really strapped for cash, you can get it same day. If the liquidity is there, you can get it the same day. The interest that you would typically pay on $50,000 with an institutional loan, it goes to the bank. Whereas with the interest you would pay in theory to your EQRP plan, it's going back into your plan. So you're benefiting from the interest that's being paid, not someone else.
I just got a whole new thought. So I'd like to run this by you if you're okay with that.
Yeah.
So let's say, well, we know a lot of people that have money just sitting doing nothing. If they were to roll their 401, their IRA, whatever it is, into your 401k, and they wanted to invest in some, we'll just say a self-storage, and they rolled a couple $100,000 into the 401k with you, could they then borrow that money and invest it?
Yes.
And then they could take the cash flow. So they have a note that they sign. I don't have this quite clear, but they've signed a note at 10%. So now they've got their $200,000. They could actually do anything they wanted with it because it's borrowed money. They could put it in something that's like a 20%, and then they could pay themselves back 10 in that account with the 200,000. They could take that other money. There would be capital gain on it. So they'd have to pay the capital gain on that when it's sold or when they got their 20% or whatever. But they don't have to pay any taxes.
There are a lot of yes, I know the train of thought you're heading down.
Ooh.
Can do that. A lot of people, to be honest with you, they like to borrow from their EQRP plans to help fund an opportunity that they want to invest in as a general partner. That's a really common reason. A lot of people, they want to get in as a GP, even if it's a small percentage, and they'll borrow from their EQRP plan, and it allows them to be a part of that opportunity.
Okay. Well, my mind just went crazy. I'll be coming up with a whole bunch of new ideas by the morning.
Very cool. Well, thank you so much for having me here.
Well, I'm thrilled you're here. Does anyone have any other comments or questions? A lot of you went off camera. David, you usually have questions? This is his lunchtime. Patricia, where'd you go? Has this been helpful? And Chris, you're already, aren't you in an IRA? Don't you have an IRA?
I've had great luck with it. So, what's
That's
the difference, Joel, between the self-directed and then your QDRP?
I think the biggest one, if you're investing in debt financed real estate, that's going to be the biggest one for you, Chris. Just using an IRA, if there's debt finance, if there's debt financed income, that's where you would see a big difference. Could be cost, but the biggest is the UBIT tax. Yeah.
Just investigate.
Yep.
Just set an appointment with Joel and have the conversation. You might get some new ideas, new thoughts. Who knows? It may work, it may not work. But it's a conversation, and that's what really counts. We want to be smarter about how we handle our money. We want our money working for us the best way it possibly can. And most of us want to avoid taxes. I just got something from the IRA telling me they've turned it over to a private company to go collect my taxes from a couple years ago. And I'm like, this is my first notice. Nobody said anything. I pay my taxes every year. My accountant said he thinks it's a scam. So he gave me, so stuff happens all the time. So pay attention, do the best you can for yourself, and don't pass up on conversations because you think you might not be doing something. Take the conversations because something new may come up for you. You're all curious people. That's why we know you're here. The more you're curious, the more you're going to learn. The more you're going to learn, the better you're going to have a life that's incredible. And my crazy saying is, the more you know, the better you go. So like that. Is
Okay.
I
there
have a question.
Yes, Jay.
Hi, thank you for this presentation. I think I've seen a presentation with one of your other principals. And so this is just for everyone's general knowledge. And I'm ignorant on this. So I did learn recently that people who use whole life insurance have to be at a certain income level to be able to even make that work, to be able to draw from it and quote unquote be their own bank. So I'm curious what your point of entry is. And the second question is, do any financial planning offices that don't collect, don't get commissions or referral fees, they simply work from the person's making sure they have their ducks in a row before they can actually invest in collecting fees based on the quality of the service that they provide and the ability of the client to be fully disclosing of what they actually have or to help them work that out with their fiduciaries? So the question is, are you recommended by those sorts of financial planning offices as a resource for where they can potentially put their money after the financial planner has determined you're a good fit?
Yeah, that's actually two really, really good questions. So there's no barrier to entry to have an EQRP plan. You need to have active income, self-employed income to contribute, or you need to have existing qualified retirement funds to roll into the plan to participate. There's no, you compared it to infinite banking. We don't really do anything with infinite banking, but loan limits, there are those loan limits that we talked about. 50,000 is that cap. As far as the recommendation from fiduciary advisors, we have a lot of people who come to us from financial advisors. And the reason they send their clients to us is because the client is interested in investing in alternative assets. And the advisor may not have that in their services. They may not have that in their channels. They may only have gold and silver and stocks and bonds, we'll just say. And the client, to keep them happy, they will offer them the option to take retirement funds to invest in those alternative assets that they might really be interested in through the plan that we offer. So we do have a lot of members who are advisors. We have people who are sent to us from advisors as well.
Does that answer your question, Jay?
Yeah, thanks for that answer. The one I work with, I have a favorite financial planner, and they get on conversations with, and this, this will overlap, and in some cases it won't, but they'll have a fiduciary that's a friend or someone that they know, or even a pastor that's, sold them a commission product that's not in their best interest. And they don't want to give up the friendship but if the money factor went away, they wouldn't be friends anymore. So it's like, they're not always interested in what's best for them. They don't want to lose the relationship, even though it's very complicated, but you offer a unique product, which I'm fully aware of that. And I'm glad that you have members that are financial planners themselves, and that you have what I'm gathering from your answer is it is a lower point of entry, and the person is able to feel more in control. And so I guess people can listen to the recording and see what the distinctions are. And if you've got I haven't been to your website recently, so if you have some sort of a chart that compares what you offer in, to whole life insurance or to other types of vehicles, I'm not sure that exists, but, to see the structure visually as to where this first fits into a person's financial planning or their lifestyle, or who's the best eligible for it, that I'm sure you've iterated here during this conversation. But I'm also curious as to a visual so that I can, number one, recommend you to the people who are best suited for you. Thank you.
Yeah, thank you, Jay. And Peggy's going to have that link for you to access the resources that you're talking about, Jay. So be on the lookout for that. She'll get that to you so that you can A, have that, and B, get in touch with us if you want to have more dialogue.
Will do. Thanks very much. And thanks, Peggy, for bringing this gentleman in. You always bring in great people.
Thank you, Jay. I appreciate the compliment. Patricia, you have any questions or any last thoughts? Chris,
No,
what
it
about
was
you?
it was interesting. Thanks.
Oh, this was great. So I got to do some research and see what's what, and I'll
Okay.
schedule an appointment. So
Okay, great. Hey, Mark, and your beautiful bird. Any thoughts at your end?
I just wanted to congratulate Joel and his terrific presentation. I've been a client with EQRP for since 2019 now, so I'm quite happy with the service that has been provided from their company, and they have a terrific community of people that surround them and their network of professionals. So yeah, I'm just slipped in because I saw a post in their community, the Badger community, and decided to come in and see what was going on with your community here, building a nest egg, and it's been terrific. I use it exclusively to invest in alternative assets, mainly private lending, and it's been instrumental for me because I recently crossed that threshold of 59 and a half. So I could actually move a lot of my company sponsored funds over to the EQRP and get that money working a lot better than could been working in stocks, bonds, and straight securities and assets like that don't really have the return that I'm looking for, and also the risk of losing money, which I can't afford to lose at this age now, where I'm looking forward to retirement, hopefully in another 5 years. So, yeah, just wanted to say that EQRP has been fantastic, and also Joel and his team of professionals, and I look forward to staying with them for many years to come.
Well, thank you, Mark. What a great testimonial that is. And we are going to send to you the recording so that you have it.
Perfect.
We send that to
Great.
everybody.
Thank you.
You're welcome. So thank you very much for coming, Joel. We hope you come back again.
I will.
We need to keep up with whatever the changes are because they're always coming up with different changes, and love to have you come back.
Sounds like a plan. Thank you all so much.